So Freetrade represents the majority of my investment portfolio. So Freetrade is currently my favorite investment platform because of how easy it is to use, the low fees, and just generally how quick it is to make trades and see how much you have invested. So in this video, I'm going to go through my Freetrade portfolio. Subscribe to this channel because I'm going to be making a lot of investment portfolio updates, and if you guys like to see that, then make sure you do subscribe. So here is my Freetrade app, and when I log in, you can see that I'm in my general investment account. So this is my general investment account, and as you can see, the value is £16,385 and it's down by £3,834. And the reason why it's down by so much is because I started investing, if I press on max, I started investing in about May of 2021, and I had no idea how to invest in stocks and shares. Everyone was making so much money on the stock market, all the YouTubers were raving about it, and I thought, you know what, you can pick random stocks and you will become richer. And that is what happened for a bit, and then kind of, as you'll see through my portfolio, that didn't continue and I made huge losses. Although I haven't realized them, my losses are down by about £3,800, which is a huge amount to be down by. So when you do log into Freetrade, you are greeted by this screen, which you can see the portfolio history of the past day, the past week, the past month, the past year, and the max. As you can see, there's many ups and downs. That's because of deposits and withdrawals, but currently my general portfolio stands at around £16,000. So on Freetrade, it's very easy to see your holdings, and they come up as these cards. So I can press see all and go all the way to the bottom, so they are sorted by value. And so first I have 0.1 shares of Intel, which is down by 40%, which is a lot to be down by, but it was only £5 worth of investing, so it's not too bad. CSN, I have 1.7 shares, and that's down by 34%. So Gap, I have 1.3 shares, and that's down by 25%. So for Kundra, or however you pronounce that here, I have 1.7 shares, and this was basically free because I was holding a stock of another company, which I completely forgot what their name was. So therefore, this value will always be in the green because there is no assumed value just because it was kind of free. So I've seen this as high as like 20 something pounds, and of course it will still say plus 0.00%. I'm not going to sell this, I'm just going to keep this into my portfolio. So next is Xinhuan Real Estate, which I have 42.2 shares, and as you can see, it's down by 82%, which is a very big loss to be taking, around an £85 loss. So of course, if I invested more into that, I would have lost a lot more money. I have 10 shares in Saturno Alcatoire, which is a random stock that I picked just because I was interested in alternative ETFs, and this is down by 13%, which is fair enough. I have Avaya Holdings, and this represents my biggest loss that I've ever seen on my portfolio because this is down by minus 92%, which is £824, and I know what I would have done with another extra £800. Next we have ESG Global, which I have 19 shares, and that's down by a small 3%. Next I have 7 shares in the German DAX, which is one of my favorites recently just because of the volatility. There is some money to be made here. So I have 7 shares and it's down by only 0.17%. So Fastly is another big loser, and that is down by 83%, and I have approximately 20 shares in this. CrowdStrike was a free stock given to me because I held a certain amount in my stocks and shares ISA, and this was a reward, so I do have to keep this for 1 year. So it was issued to me on the 2nd of December, and I guess I can sell it after that, but I'm going to still keep it. Aston Martin, another huge loss of minus 80%, which is terrifyingly painful, especially because it's Aston Martin. You know, they started off at £116 and then now they're at £4, which is stupid. Clover Health, another big loser, minus 80%, so that's a £716 loss. So Cognite Software, another big loser. As you can see, there's a pattern. If you choose random stocks, you are almost certainly going to get burnt at some point. So that's minus 78%, and that's around minus £700. AGM Holdings, another big loser, minus 76%, down by £684. Alba Mineral, quite a big loser at minus 51% with a loss of around £486. Metro Bank is surprisingly another loser at minus 40%, £317 down. I do have hope in the future that Metro Bank will get their stuff together and can hopefully go back to their heydays of around £30. That would be amazing. So Alibaba is one that is also down by around 50%, so minus 51% with a £511 loss. If you do add all the losses in this portfolio, they will go to over £10,000 in losses. And the reason why the portfolio is down only minus £3,800 is because I did make some wins and I did sell some of my holdings before, and therefore it kind of balances it out. I made probably around £6,000 in the previous tax year. Corsair is here with a minus 48% loss, which is really big because I really do like Corsair as a company. I know they're making a lot of strides in the whole gaming department with the PC peripherals. I think they're even making their own laptops and stuff, so let's hope that Corsair will come back up so that I can recuperate some of my lost cash. So One Life is down by minus 37%, which is quite a lot, but you know, it's not as bad as my other holdings in my portfolio. It just goes to show, you know, by comparison's sake, that things can look better. So it's all about perspective. Shoals is down by minus 18%, and I have 33 shares in that, and 18% is not too bad considering the current climate. So I have iShares S&P 500, and this is down by minus 14%. Again, not too bad. I have Baidu, however you pronounce that, and that is down by minus 10%, which is not too bad. And I do have hopes of this coming back, hopefully somewhere in its heyday. So sometimes it is worthwhile holding onto these stocks. The thing with choosing individual stocks is that a lot of them will underperform, but some of them will perform so high that it will kind of counterbalance it. So that's why diversification is very important. So my biggest holding in my entire general investment account is this, the FTSE Japan, which I have 355 shares of, which is a lot, and it's only down by minus 3%, which is not too bad. So I do have hopes of this coming back to normal sometime soon, and I will sell it when I'm in profit. And I do like the FTSE Japan because Japan has a good economy. Even though they are known to have a very stagnant economy, I do somewhat believe that it will come back to what I bought it for and a bit more. Also, if I press account here, you can see how much cash I'm holding. So in my general investment account, I'm holding around £1,492. It is not wise to hold on to a lot of cash. It is good to hold on to a bit of cash because if you see a bargain, then you want to grab that up quickly. But holding on to cash means that inflation is eating away at it. Also, everyone is predicting this recession, okay? Everyone thinks that there's going to be a recession where you can put all your cash down and make a lot of money. But if everyone is holding on, no one's actually selling off any of their assets, this recession actually will be delayed so far until everyone just gives up, doesn't hold the cash anymore, and then everyone misses out on the bear market. So it is never ever wise to time the market. You should invest consistently and try to dollar cost average into the market. I should take this advice on board, but of course my risk tolerance might be a bit higher than yours. So that was my general investment account. I'm now going into my ISA. So my ISA is a bit larger than my general investment account. So the current balance is £42,043.87, and it's up by £2,000. So for my ISA, I had a completely different strategy, which is to not be stupid and select individual stocks and to invest in ETFs only. Now I just want to show you my account first because I have around £31,000 that's in cash, and I don't recommend holding onto this much cash, but like many other investors, we all think that there's a looming recession, and holding cash seems like a good strategy because the recession could be around the corner, the prices of all the stocks could just plummet, and if we're holding onto cash, we can actually deploy that and make a lot of money. But that is not the best advice. I've been thinking about it a lot, and I have changed my strategy into investing. Before I had around £41,000 in cash, but now I'm trying to put more into active investments, buying ETFs that I think are good value and that will be making me money in the short run, keeping a bit of cash just in case this recession happens. But you know what? This recession could easily not happen. It could be pushed maybe 4 or 5 years into the future, and all these gains that you could have made, you didn't make because of the idea that you would have had bigger gains. So it's kind of investing 101. Stay invested regardless of where the market is going, and make your money go the long way, and just don't hold things as cash. So my ISA is a lot simpler with a lot less holdings, but I'm going to go through them anyway. So Alba Mineral, I only put around £6 in there, so I hold 2,403 shares. It's just crazy how cheap the Albert Mineral shares are, and that's how much I got for around £6. Mast Energy, 554 shares, again another company that has very cheap stock prices. I bought a lot with the hopes that one day it goes to something like £1 and I can make a lot of money even with such a small amount of loss. So even if I lose all this money, it doesn't matter, the gains can be a lot higher than the deficit. APAC X Japan, I have 1 share, it's down by 4%. S&P 500 by iShares, I have 5 shares and it's down by 15%. Disney, I have 3 shares and it's down by 8%, which is fair enough. So what I'm trying to do with my strategy is to slowly deploy all my money back into my ETFs, and from now on I will never sell. I'm just a long-term investor. That was my goal in the beginning anyway, and I am now buying back all these ETFs at a much better value. So I'm not really losing in the long run, but I will keep invested, get all the dividends, reinvest that, and keep contributing to my ISA. So I've maxed out my ISA the past 2 years. I plan to invest around £1,700 per month into my ISA. So already I've maxed out my ISA for this year, so I have a few months extra. So I'm going to put all that money into my general investment account to put into stocks that I think are going to be holding their value till April, and then start selling off some from my general investment account and putting them into my ISA. Right now I think the German DAX is a very good value just because it's gone down a lot. You can see in the last bear run it went down to £15. I don't think it will go back down below that, but of course I could be wrong. I have no actual data to support that claim, but I think at £17 the German DAX is very good. I'm actually going to start buying daily. Whenever it drops below the current price, I'm going to keep buying the stocks. I think that's a good idea. I have 3 shares in Meta, which I think one day will go back up to its heyday, if not more. I'm not really dabbling in individual stocks on my ISA, but those two, Meta and Disney, I think are going to be long-term growers. So I also bought around £9,000 worth of FTSE Japan the other day, which I also think is quite a fair price. And already since buying it's gone up by 0.38%, which is a £34 pure profit. But of course, you shouldn't have the trader mentality, you should have the long-term mentality, and the FTSE Japan could possibly pay out. Just because I know I bought a holding in my general investment account for around £25 something, so I'm sure it will recover to there at one point in time. But anyway, this does pay dividends of 2.6%, and I'm willing to hold on to it anyway, so I think you can't really go too wrong in buying ETFs at fair value. So going forward, my plan in the recession, which we're currently in now, is to buy ETFs back at their fair value. So when the S&P 500, which was my biggest holding in Freetrade, went to £67 in the beginning of this year, I did sell all of my holdings. I knew that £67 was way too high and I wasn't willing to keep buying at that price, and sure enough it did fall. It did go back up again around £67, but then it's falling again. I do think that the S&P 500 is going to drop a lot more, so I'm going to buy back everything at a much lower value, and that way I've already sold my holdings and I've made profit, so that just keeps getting reinvested. But going forward, I am going to hold on to my ETFs and never sell, so just keep contributing to my accounts. Firstly my stocks and shares ISA, and then when that's finished I'm going to just put it into my general investment account. Be sure to check out my other videos and I will catch you in the next video.